Welcome back to the channel. Today, we're diving into a crucial topic that can save you a lot of money. How to maximize your tax refund in 2025. Understanding how to navigate the world of taxes, deductions, and credits can mean the difference between getting a little bit back and getting a whole lot back. So, whether you're a seasoned pro or just starting out, stick around because I'm breaking down everything you need to know step by step to potentially maximize your refund in 2025. Let's get started. Alright, let's kick things off with the foundation of a smooth tax season, getting organized. First things first, grab yourself a dedicated folder, whether it's physical or digital. This is going to be your tax command center for the year. Throughout the year, start stashing away any documents that might be relevant come tax time. Think W-2s from your employer, 1099s if you're freelancing or have side hustles, and any investment statements. If you're self-employed or itemizing deductions, keeping track of business expenses, charitable donations, and medical costs is crucial. Pro tip: snap a picture of the receipt right then and there and organize it into digital folders. That way, you're not stuck sifting through crumpled pieces of paper later on. By having everything in one place, you can easily spot potential deductions, track your income, and ultimately make smarter decisions about your money. Trust me, when it comes to taxes, procrastination is your worst enemy. So, get a head start, channel your inner organization guru, and thank yourself later. Let's talk about securing your future while keeping more money in your pocket today. Yes, I'm talking about retirement accounts. Contributing to retirement accounts like a 401k or a Roth IRA can actually reduce your taxable income, which means a potentially fatter tax refund. With a traditional 401k, you're essentially telling Uncle Sam, "Hey, I'm going to put this money away for retirement, so don't tax me on it now." That means the money you contribute goes in pre-tax, lowering your taxable income for the year. Now, a Roth IRA works a little differently. You contribute after-tax dollars, meaning you've already paid taxes on that money. But here's the beauty. When you retire and start withdrawing, those withdrawals are tax-free. Even small contributions can add up over time, thanks to the magic of compound interest. So, if your employer offers a 401k match, take advantage of it. It's basically free money. Remember, investing in your retirement isn't just about securing your future. It's about being smart with your money today. Alright, let's dive into the world of tax credits. Understanding these can make a significant difference in your financial health. Unlike deductions, which reduce your taxable income, tax credits directly reduce the amount of tax you owe, dollar for dollar. This means more money stays in your pocket. First up, we've got the Earned Income Tax Credit, or EITC. This is a crucial credit for many working families. This credit is designed for individuals and families with lower to moderate incomes. It can provide substantial relief. Next, we have the Child Tax Credit, a lifesaver for many families. This credit can significantly reduce your tax bill. This credit can provide up to $2,000 per qualifying child under the age of 17. It's a huge help for parents. Now, if you're a student or paying for education expenses, listen up. There are credits specifically for you. The American Opportunity Tax Credit and the Lifetime Learning Credit can help offset the cost of college tuition, fees, and even course materials. These can be a game changer for students. And for those of you making energy-efficient improvements to your homes, there's a credit for that too. It's a win-win for your wallet and the environment. The key here is to do your research and see which credits you might be eligible for. Don't miss out on these opportunities. Remember, claiming these credits can put a serious dent in your tax liability, so don't leave any money on the table. Make sure to take full advantage of what's available to you. Chapter 4. Track deductible expenses. Let's talk about deductions, those magical things that can significantly reduce your taxable income and potentially boost your refund. Deductions are essential tools in your tax toolkit, and understanding them can save you a lot of money. When it comes to deductions, you have two main options: taking the standard deduction or itemizing your deductions. Each has its own set of rules and benefits. The standard deduction is a fixed amount that varies depending on your filing status. It's straightforward and easy to claim, but itemizing your deductions might allow you to deduct even more, depending on your individual circumstances. This option requires more effort but can be worth it. If you're self-employed or own a business, the world is your oyster when it comes to deductions. You have a wide range of expenses that can be deducted. You can deduct expenses related to your home office, travel, supplies, marketing, and even health insurance premiums. These deductions can add up quickly, but even if you're not self-employed, there are still plenty of potential deductions to explore. Don't overlook these opportunities. Medical expenses, state and local taxes, property taxes, mortgage interest, and charitable donations are just a few examples. Keep those receipts organized. Every little bit helps. Remember that tax command center we talked about earlier? It's your hub for keeping everything in order. This is where it really comes in handy. Having a system in place makes the process smoother. The key is to be meticulous and track everything. Don't let any potential deductions slip through the cracks. Deductions are like hidden treasures in the tax code, and claiming everything you're entitled to can make a real difference in your refund. So dig deep and uncover those hidden gems. Alright, let's talk about filing your taxes. And no, I'm not talking about those archaic paper forms. In today's digital age, filing electronically is the way to go, and here's why. First and foremost, e-filing is fast. You can submit your return with just a few clicks, and your refund will likely arrive much sooner than if you filed by mail. But it's not just about speed. E-filing is also incredibly accurate. Tax software programs are designed to catch errors and ensure you're claiming all the credits and deductions you're entitled to. Plus, you'll avoid those dreaded math mistakes that can lead to delays and even penalties. There are tons of reputable tax software programs available, many of which offer free versions for those with simple tax situations. Trust me, once you go digital with your taxes, you'll never want to go back to the old school way. We're in the home stretch now, but before you hit that submit button, there's one crucial step you don't want to skip: reviewing your tax return for errors. Trust me, even the smallest mistake can lead to delays, penalties, or even an audit. First, double-check all your personal information. Make sure your name, social security number, address, and filing status are all accurate. Next, scrutinize those numbers. Verify your income information, deductions, credits, and any other figures you've entered. If you're using tax software, most programs have built-in error-checking features that can help catch mistakes. But don't rely solely on technology. Use your own judgment and common sense. If something doesn't look right or you have any doubts, don't hesitate to seek professional help. Reviewing your tax return is like proofreading an important document. Take your time, pay attention to detail, and make sure everything is in order before you send it off to the IRS. Let's face it, taxes can be complex and often overwhelming. And while this video has provided you with valuable information to navigate the process, there are times when seeking professional help is the smartest move. If you're self-employed, have a complicated financial situation, or have multiple income sources, or simply feel overwhelmed by the entire tax process, it might be time to call in the experts. A qualified tax professional can be worth their weight in gold. They can help you identify potential deductions and credits you might have missed, ensure you're complying with all the latest tax laws, and keep you updated on any changes. Ultimately, they can help maximize your refund or minimize your tax liability, giving you peace of mind. When choosing a tax professional, it's essential to do your research. Look for someone with experience, good credentials, and a solid reputation. Look for someone with experience, good credentials, and a solid reputation. Check their qualifications and reviews. You can ask for referrals from friends, family, or colleagues. Personal recommendations can be invaluable. A good tax professional should be happy to explain things in a way you understand and address any concerns you might have. They should be approachable and willing to answer your questions. If you're feeling lost in the world of taxes, don't hesitate to reach out to a qualified professional. They can provide the guidance and support you need. they can provide the guidance and support you need to navigate the process with confidence, ensuring you make the best financial decisions. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on managing your finances. Remember, maximizing your tax refund is all about being proactive, informed, and taking advantage of all the resources available to you. So start early, stay organized, and don't be afraid to seek professional help if needed. See you in the next video.